Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, guys. Welcome back to the live stream. As markets, oh my gosh, they've gone crazy in the last 12 hours, really. Some tough stuff going on in the world today. That's not new, and you don't need me to tell you that. But we do have, unfortunately, some stuff that happened last night that caused the markets to go absolutely wild. Last night, there were reportedly attacks in the Middle East, supposedly from Israel to nuclear locations, I suppose, in Syria, Iraq, and Iran. Sorry, I'm still getting used to saying the name right. But unfortunately, that stuff is terrible, and it massively threw the markets into kind of chaos last night. If you take a look at the price of oil, though, what a crazy 12-hour period we had. What you can see is that the oil market here jumped up significantly and has now rolled all the way back over just like that. But everything was kind of thrown for a loop yesterday, whether you trade currencies, commodities, indices, whatever you were watching. My goodness, it was just a crazy thing to see how fast these markets move when there is, of course, crisis in front of us. So let's just talk a little bit about, I just want to go through several markets here really quick. So the S&P 500 after hours sold off substantially. You can see there is the candle that was. So we had this huge drop in the S&P 500 down to 49.30, which is crazy on the S&P. SPX moved significantly lower. At the same time, you had the NASDAQ sell off. It's bounced back here. You can see here's the Dow. The Dow dropped and then bounced. And then the Russell, which, believe it or not, guys, I am actually short the Russell. Very, very rare for me to short indices. I don't really like to do it that much. But the trade is it was just there. And I had to take it. I'll tell you in just a second more about the Russell. I'll come back to this. I have a trade on this one. I am short. I'm up a little bit on this trade here, and it's going well so far. But I want to talk about why. I will say it had nothing to do with the expectation, or I didn't trade this because of what happened last night. But what happened last night, of course, caused a lot of markets to really, really drop. So you can see here's the FTSE 100, the German 40. So pretty much all the indices took a hit last night. The VIX is back up, but kind of coming back down here a little bit. You can see it poked up. VIX went up to 2130. Crazy, right? And historically, that's not crazy, but in recent times, it certainly is. So remember that the VIX and the volatility index, guys, is a very powerful tool that I think every trader should have it on their watch list. The VIX just tracks S&P volatility, expected volatility, really. It's like a big implied volatility metric. And what this tells you is that if the VIX is jumping, Frank sent me a text last night. He said the markets just feel very different than they did the last few months. And I pointed out to him, I was like, yeah, that VIX changing its pace really has everything, flipped upside down. So remember, I say this frequently, most traders, they have recency bias that is really dangerous. Look at this. It looks like a big face. I can add a nose here. So traders have like recency bias to the max, especially newer traders. This is a mistake that gets made very frequently. They get used to this environment or this environment, and they are blown out of the water when the environment shifts. I highly urge every one of you guys, look at the VIX and understand it. Because if you don't understand it, you're going to get wiped out when your strategy, which works well in this environment, gets smacked by one of these. Okay. So you have to understand something about financial markets. They don't stay the same nature all the time. So in this period of time, what works? I'll tell you what works. You buy every single dip on the S&P 500 and it rips to new highs, and you just make easy cash money. Right? It's really easy. But then what happens when you're no longer in this environment and suddenly it completely changes? I'll show you. Here's another good sound for that.
Instant pain.
Instant pain, okay?
Instant pain.
That's what happens when you get too caught up thinking that, okay, the market can't change on me. This strategy is unbeatable. I will tell you right now, there are no strategies on planet Earth that work well, perfectly well, in both environments. Your strategy probably works well in one or the other, but not both. Now, I'm a big advocate for mixing more than one trading strategy. I know it's not popular theorizing stuff on YouTube. A lot of people say specialize, stick to your one strategy. I'm not saying that that's wrong, but you also have to understand that if you trade one particular strategy, I'll give you my example. You guys most people who watch my channel, you know, my general strategy is I'm looking for fundamentals. I'm looking for pullbacks. I'm looking to buy things. I'm looking to sell things that are in downtrends, right? That strategy works great sometimes, but it works not so great in other times. Whereas if you're someone who's more mean reversion based, where you're looking for extended levels to try and trade back and forth from, sometimes that strategy works amazing, but no strategy works well in every market. Anyways, let's see what else is on the move. The dollar index is coming down slightly here today. The gold market is, it poked up to close to all-time highs. Went up to 24.17 overnight when we saw, markets kind of panicking in reaction to, what is happening in the Middle East. Is there, are we going to see like a breakout of World War III? Let's really hope not. But that stuff is scary to the financial markets. It's scary to everyone, right? And we hope every day for peace, but it's a really tough time in the world, and things are crazy over there. Oil again spiked massively on the attacks that happened last night. That was late last night for me. I think it was like 10 p.m., 9 p.m., 10 p.m. And has proceeded to sell off, but the market's all over the place here today. Let's take a quick look at yields. So yields, the 2-year yield shot lower, right? So some demand for bonds came in real quick off of what happened last night, right? So bonds are a safe haven asset, right? U.S. Treasury bonds are very popular for, getting a little bit risk off. So we did see a poke up in that, especially in longer term bonds. You could see the 20-year yield dropped pretty hard, but it's bounced back. And, as crazy as war concerns are, one thing you also have to understand about markets is that usually war spikes do not last very long. They usually are like quick blips and then they turn around. And that's just a really recognizable back and forth thing. Quit showing thumbnails with people that are not even in the video. Who's on the thumbnail today? I'm not even sure who is on the thumbnail today. Usually I'm not the one coordinating that, but if somebody's on the thumbnail, usually they're coming on the stream, and if not, you might see them on the next day. But if you're really upset, what I'd encourage you to do is just unsubscribe, and I'll send you a refund for this live stream. Are you in the gold spot market? No, I don't have any gold trades on. I am still long silver though. So silver has done really nothing for a couple of days. But if you guys remember, my gold trade did nothing for a few days before it really exploded. So, with everything that's kind of spinning around right now, I feel comfortable holding on to a silver long position. These are my two current trades. I'm short the Russell and I'm long SLV. So let's see. With Russell, I have to talk about my trade here. So I officially took my first short on a US index. I don't even know how long it's been. I just very rarely short US indices. It's a really tough trade. And to be honest, I would be surprised if this thing just blew up to the upside. In fact, I'd be okay with that for some of my options trades. I actually would like a bounce. That being said, though, why the Russell and why now? So I shorted Russell yesterday on this wick to the upside. It was beautiful. I wish I could do this every time. My entry was like picture perfect. I sold the Russell as it came up into resistance here yesterday. And the reasoning for it is I just think the story right now, painted here by the edge finder, continues to look bearish for the Russell. Let's go through this for a second. Why the Russell? Why now? Refund the live stream. You like that one? Yeah, that's my bounce back. If somebody complains about free content on YouTube, it's literally like you're not paying for this. Like, it's free. Come on. If you don't like it, it's all good. Just click out of the video and move on with your day. It's totally free to be here. That being said, if you guys enjoy the stream, do me a quick favor, hit the thumbs up button on the stream. Very much appreciate it.
Pretty much in line with our expectations.
There it is. Hit that thumbs up button. So yeah, why the Russell? Why now? I'll tell you why. So the Russell, we talk about it over and over on the live stream. Right now, it looks like the story is yields want to go higher. Okay. A lot of people, a lot of smart people are thinking that this backup in rates could push up to 5%. And if that happens, guys, if yields do continue to rise, first of all, we'll come back to the Russell, but you have to know if you're going to trade the Russell, a lot of indices that are sensitive to interest rates, keep your eye on the US 10-year treasury rate. Okay. The yield here is very important. We're at 4.6%. Now, why is this so important? Here's why. If yields are higher, the appetite for stock indices usually declines. The reason for that is, think about if you're like some ginormous pension fund or hedge fund or you have an option. You could go into stocks or you could go into bonds. Okay. Here's the big debate. Do you go into stocks or do you go into bonds? From first glance, you might say, obviously, stocks are going to do way better. They historically do better. And that is true. But bonds are considered more safe than stocks. Okay. This is like what many would call the closest thing in financial markets to a risk-free return. So if you're telling huge investors that there's a potential war breaking out in the Middle East, that you're seeing, a higher for longer Federal Reserve might be the reality that we're facing, and you can go hide out safely in bonds and get 4.6%. Why would I go risk my entire trading, investing situation? I could see a 30%, 40% drawdown in stocks, right? At any given time. That's something you accept with the stock market. And yet I'm going to get what, 9%? So I could get risk-free at 4.6 and just wait for, hide out. And if the stock market drops, hey, look, I could go take that money out of the bonds and I could go into stocks at a better rate. So the problem here is you have to think about this stuff. If you're somebody who watches indices, there was a period of time the last few months where I just kept seeing people say, you just buy indices and you make money. And if you're willing to hold longer term, you're probably going to get 9%. But you also have to accept that if you just buy and hold indices, you might see 40% drawdowns, right? 30% drawdowns. You know what happened in 2000 if you bought the NASDAQ? 90% drawdown. Go look it up. So stocks they don't go up forever. They don't always go up. And so there's this increasing argument for Why would I buy stocks when I could go into something safe like bonds? And this story was very prevalent early 2023. And in fact, it was actually the worst possible time. You should have just gone into stocks, because the end of 2022, the top of 2023 was a remarkable time to buy stocks. But is it different this time? That's the question. So the point that I'm trying to make here, guys, is that a rising 10-year yield is problematic for stocks because it starts being a competitor to stocks. So my first reaction to seeing yields on the rise was because the Edge Finder is showing all this economic data. That makes sense. Economic data strong out of the US. That means yields go up, right? Yields go up on strong economic data. Now, that rise in the 10-year is not equally distributed between all the different indices. There are certain indices that will get hurt more or less from that situation. The area that hurts more is going to be smaller companies that are more dependent on debt in order to function. So when this market poked up yesterday, it hit a level of resistance that I liked on the 4-hour chart. And I had confirmation from the Edge Finder of a bearish setup. I shorted the Russell. And again, I rarely short US indices, but I hope that breakdown was thorough enough. I rarely short US indices because I generally like to be more long biased on stocks. But the Russell, the story is tough here. Now, that being said, you can see my trade has come back against me pretty substantially here. What was a really, really huge, floating profit has coming back a little bit, but I'm still in the trade and I'm going to honor my stop loss for now. In fact, what I probably will do is I'll probably trim this stop loss just after stream, just to trail some of that initial risk. We saw such a good reaction here. If we come back up here and we can't hold a similar reaction, that's going to just be, I'll be out for a tiny loss. So I'm not necessarily risk free on the Russell trade, but I'm going to trail my stop and I'm going to be prudent about this. But I like the story to the downside for the short term. It's just not my I don't feel like, it's not about feelings. The data here is leaning bearish for now. And so I had a technical setup. I'm managing my risk, and I'll probably look to sell the Russell or continue to hold my Russell sell until further notice. If it gets stopped out, am I going to re-enter? I don't know. I'll have to keep an eye on it. But I think markets are just all over the place here this morning. US stock market just got opened up. You've got the 15-minute chart. Interestingly, you see the NASDAQ down, Russell up. That would tell you that perhaps yields are coming down here on the short term. Yep. 2-year, slightly down from its highs, but still, the Russell took a huge beating yesterday. So, we might be just seeing a bounce here. That being said, like I said, I won't make excuses. If this market breaks higher, I'll take my profits off the table. By the way, guys, the Edge Finder is currently 45% off. If you haven't heard about this sale that we're doing, this is our biggest sale of the entire year. We're going to drop a link here in the chat really quick. If you guys would like to get 45% off the Edge Finder, click this link being dropped in the chat right now. It will connect you to someone on our team who can get you set up with a copy for our biggest discount of the year. Okay? Now, why is the discount so big? The discount is so big because we do this sale annually. This is our second anniversary, I suppose, since we launched this product, the Edge Finder. The Edge Finder is an all-in-one fundamental toolbox for people who are looking to get more involved in fundamentals, but don't have, hours and hours a day to read so many different articles and go through so many different reports and listen to so many different podcasts and news outlets. That's what you have to do to stay on top of fundamentals. So with that in mind, I built this tool really. Frank and I built this tool together. We designed this thing to be our all-in-one tool to look at all of this data very quickly, but more so than just look at the data, to actually factor in a scoring system across this data. It's become a way more difficult, challenging, and incredibly fun project for us over the years. And it is so cool that we have so many traders around the world using our software. That being said, if you'd like to take advantage of this sale and get access to the commitment of traders data, get access to the retail sentiment data, all of our different economic data tools that you can use to better understand the financial markets all in one tool, not clicking through 30 different websites a day and reading articles all day long, one tool. If this would be helpful to you, take us up on this offer. Again, it is the biggest discount of the year, 45% off. Click the link being dropped in the chat right now. And will it be bigger on Black Friday? No, this is the biggest one of the year. Black Friday may match it, but it'll be, it's up to, but to be honest, this is going to be a better price than Black Friday, because by Black Friday, we almost certainly will have higher prices on the tool. Our upkeep costs go up over time, and so does the cost of the Edge Finder. Today is your chance to get it for the best possible price of the entire year. Do not miss out. Okay, there you go. Also, real quick, what we're going to do is we're going to just take a commercial break to thank our sponsors. And then just after that, we're going to be joined by Kenzo for a quick little Fundamental Friday section. Should be fun to see what he has to say about the financial markets today with everything going crazy. This question will be 80 Black Friday. We'll never do an 80% off. Again, the cost of running the Edge Finder, there's significant overhead to building and maintaining a tool. So we do offer, this is our most generous offer we do all year. All right. With that said, guys, quick break. We'll be right back just after this.
Attention, A1 Trading Show. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we are back with Kenzo. Hey, Kenzo, how you doing, man?
I'm doing great, thanks, and you?
I'm good. It's good to have you back on the show. Today, we have, again, kind of a crazy 12-hour period here. We had, unfortunately, more escalation in the Middle East. Seems like there was some attacks in the Middle East here overnight, which caused the markets to really freak out. You had the NASDAQ down substantially overnight here. It has bounced back since then, but markets are all over the place. Geopolitics, you've got yields on the rise. The VIX is up. I mean, it just seems like a very different market than it did a few weeks ago, doesn't it, Kenzo?
Yes, man. It's very crazy because the strike from Israel to Iran actually escalate these tensions, and that will just make oil, gold to go very seriously higher. But on the other side, when we talk about NASDAQ, obviously they don't really like this type of tensions. We will see some crazy sell, but it seems like I saw the news now, within an hour, they said Iran actually responded. They just said if Israel repeat the same, they will then punish them. I think that it's a good news because it seems like they're not gonna escalate the issue. So which means maybe today we might start to see some reversals, and unless if maybe Israel continue with another strike, then that is gonna be a different story.
Yeah, that's a really good point. I hadn't heard that, but that definitely would make sense why the market would potentially be bouncing off of that news, just because if they're kind of like, okay, we'll call it there, and then there's no further push on that, the aggression, that could lead to maybe we're going to put a pause on that situation. That also would make sense, Kenzo, why we had this huge uptick in the price of oil, followed by a significant drop in the price of oil shortly after. Again, what a crazy 24 hours, I guess. But Kenzo, I wanted to ask you too. So the geopolitics stuff, of course, causes spikes all over the place. It usually, though, is pretty short-lived in terms of what the market is focused on. And it seems like pretty quickly we just go back to focusing on the core stuff. Like, for example, Specifically, what I'm talking about is going back to what's the Fed going to do? What does the economy look like? What do what do other economies look like? So I guess my question now is, let's put the geopolitical tensions to the side for a moment. Is this stock market, which has been struggling here recently, the Nasdaq, again, despite this big wick off of the low here, from all the geopolitical tensions, the Nasdaq before that was still selling off, sliding lower here. We had Netflix earnings. I think that was the first kind of high growth name that came out. It disappointed the markets in a way. I know that it was kind of a idiosyncratic way because it was specific to subscriber growth. Was they're no longer going to be showing a subscriber growth, so that the market didn't really like that, but their numbers overall were pretty good. That being said, is the stock market is it due for a bounce, or does it have more room to come down?
I think we have another room to go down. Remember, few months ago we did talk about this. When Fed, they said they're gonna cut the rate. They were expecting to cut the rates, and that they were focusing on the data that they were receiving at that time. So even though they said that, the market price into that, in whatever that they said.
Yep.
So it seems like now the market came to that reality that no, it seems like that is not going to happen anytime soon. So that pricing, I think, is going to go down to where the market aggressive sells. Problem with the indices like this, like Nasdaq, they can still go down, but the reversals can be crazy. They can reverse and still go down, reverse and still go down. So you need to understand how they move. But inflation now, it seems to be way too important. I saw the last statement from Powell also. He said they're still going to look for the data, but we start to see that the data is not really good.
Yeah.
So which means he's in pressure. I don't think, even if they cut, maybe they might not really cut 3 times. But some, they still saying, yeah, maybe we'll see some cuts. But to me, it feels like the data doesn't really allow them to do that. If they do, it's fine. But it seems like that is not going to be that simple.
Sure. Yeah. And that's the thing is, how long can this market accept that we might be higher for longer? And, Kenzo, I'm actually more in the camp of, I actually, as weird as it might sound, I'm not really hopeful for rate cuts. I actually want the stock market, and I think the stock market can do well in an environment where we don't need to cut rates, not because inflation is incredibly problematic. That of course, if we see talks about rate hikes, yeah, that's not great. But what I am talking about is if we see an environment where inflation is okay and it starts to cool eventually, but the economy is just really strong, and that means, we just don't see rate cuts coming for a while. I like the idea of a no landing. In fact, that's probably my favorite scenario to be long, areas of the stock market specifically that have pricing control, that aren't super reliant on debt. That's actually probably like my ideal scenario. I don't like the idea of needing rate cuts, or, and it's also another, I heard someone point this out. One thing that's very cool is that if we can keep rates high and the stock market can still stomach it, that also gives us a get out of jail free card, where the Fed has more room to cut rates if it needs to. If it starts cutting rates, we lose that kind of back pocket, play. So I kind of like the idea of seeing the economy continue to hold in there, and then you be long areas that are not super sensitive to rate cuts. That being said, I think right now the market is accepting higher for longer might be a story. So short term, I lean more on the bearish camp until we can find, a bounce and we get through earnings season, and perhaps there's some good earnings. That's my favorite story, is wait for that pullback, be long stocks that are not super sensitive, perhaps, mega tech companies. And maybe we just see a strong enough economy that inflation doesn't, really cool. That being said, what do you think about that? Is that kind of what you're thinking too?
Yes, because if you still remember, let's say a few years ago, let's say 2022, going back, inflation was around 9%. Now it's playing around 3. To me, that it's good. It's quite good.
Sure.
And it shows us that actually the dollar or the economy, it's performing very well. So there's no point for me for them to rush on increase or on cutting the rates. They were just
Yep.
supposed to say, oh, it's fine, we will take it that slow. Because once they start to say that, people, they start to price in that price. They start to buy now, but actually that makes no sense, because once things doesn't really go well, it shows that no, the market was still doing, the economy is performing very well, but the rates doesn't really seem to be going down anytime soon, and that is okay, because from 9 to 3, that's too much. So I don't really see the market also struggling with that. 3%, it's reasonable than 9% or 8%. So I think us traders, that we just jumped in because they said, oh, we're gonna cut the rates maybe around June. Then we started to buy a lot of stocks, and then the market started to go aggressive. I think this reversal that we have on Nasdaq, to me, it's reasonable. Then after, the market will start to go much better, slower than before. So now we can easily see that dollar is quite stronger. So it shows that the economy is doing very well, which is something that we need, because we don't really need a recession. That's good. Then now this sell, I think maybe we just need to stay out little bit. I think the market will then push higher maybe after next week or next week. I don't really see them not performing very well. I mean, like Nasdaq companies, you see.
Yep. Yeah, no, I understand exactly what you're saying about like the Nasdaq specifically, and it'll be interesting to see where we go with that. Kenzo, what do you think about gold right now? Gold, silver, of course, with the geopolitical concerns, has been spiking all over the place. But what are your thoughts overall for that area?
No, gold on the other side, I think slowly we start to see that that momentum is no longer that aggressively strong. If you did check, I think it's 2 days ago, China actually reported their GDP, which actually it was better than estimates. I think it was 5.3, so which means it's now growing. That might reverse this overbuying of gold, maybe in few weeks or maybe in few days. But because of these tensions, it's still very strong on the other stronger side. But I think slowly we will start to see gold going a little bit lower if people like on Chinese side or other economies which are not performing very well, if they're going to focus on the positive side of their stocks. But if maybe they still feel like things are not really looking good on their economy, I still believe that we might still see a very nice bullish move on gold.
Yep, should be interesting to see how that plays out in terms of the metal itself is in demand when geopolitical tension escalates. So we've seen these spikes all over the place, but I'm kind of with you. If you get on gold this pop above resistance, it could kind of unlock another wave higher in terms of upside. That being said, what is tricky for me with gold and why I'm kind of neutral on it right now is that if you get the geopolitical tensions cooling, you probably lose some of this pricing at where we're at. Like let's assume that there is some more peaceful progress that comes into the market, or like comes into the story there in the Middle East. If there is kind of a universal, okay, we're done with that. If that happens, gold probably drops for a little bit just because it's elevated in relation to that story. That being said,
Yes.
the other thing that is a little tricky for me on gold is that the U.S. Not looking to cut rates for a longer period of time is part of the story. When rates looked like they were going to get cut, that was part of the story that got gold to explode higher. So we have to accept that, well, probably if we're not going to get rate cuts anytime soon, that's going to hurt the story for gold. That's where I'm a little bit tricky for me on gold. I think for gold to keep going, you either need to see yields come down or you need to see geopolitical tensions escalate further. Is that kind of what you're thinking too?
Yes, for now, actually not only gold, oil, and there's other commodities. They are tricky because, for example, for us on a different side, it might look like it's easy. But imagine if maybe you are staying in Israel or maybe Iran, and
Mm,
maybe you are a trader or maybe you are an investor. So
yep.
one way or another, you know that the market or the stock market in that country is gonna panic if
Yep.
maybe you buy in the local stocks. So it means most likely will be buying gold. And if maybe things go well within a week, they will be selling aggressively, unfortunately. On the other side, like us, we will take time to see that happening. Then it will be late. I think the market already will be trying to sell. I see
Yep.
someone on the comment said China is not doing great. I think that is still the point, but the GDP, it was performing very well. It doesn't really mean that everything is now good, but still it performed very well. I think they're still gonna buy enough gold, but I don't really think that it's gonna fly like before. Maybe we might start to see some consolidation going further, even if maybe it might go up. It's not going to be like before. So when you buy, just buy slower. Don't fight it like before.
Yep, exactly. And I think that's a fair point. With the Chinese growth side, there's several companies there that or US companies that are also very much listening to that story. Key names like
Yeah.
Tesla, Apple, Nike, a lot of the consumer discretionary stuff that is, big in China, is also very much dependent on whether or not that stuff bounces back or not. Kenzo, I wanna just say thank you for coming on the show twice this week. We appreciate everything that you bring to our show here in terms of fundamental and technical analysis. I just want to say to everybody who's listening with me here live, if you have not already subscribed to Kenzo's YouTube channel, please do that right now. We'll drop the link to his channel so that you can check that out. Again, he puts out content on a regular basis, both fundamental and technical. And, again, definitely if you're not already on there, it's free value. Why not? His link is right here. Click that link, subscribe to Kenzo. And Kenzo, thank you very much for coming on the show today, man.
Thank you very much, and your viewers, man.
All right. We'll see you again next week. All right. With that said, we're going to now shift gears again. But before I do that, I just need to update you guys. I did add slightly to my short on the Russell just a moment ago. I am writing up something. I was trying to not be rude to Kenzo, but I was writing up a little bit of an update on my short here. So let me just finish this. I added slightly to my short on the Russell at current levels. I also trailed my stop to reduce my overall risk. Okay, so let me just make sure that I have this all set. So my stop loss has been moved to 196.05 on IWM. My entry, now let's take a quick look at the futures version, RTY. Stop loss is at 1977.2. Let me make sure that's good. Yep, good there. Entry is the same. And we're good. Okay, I'm going to just share a screenshot of this as well. And I'm going to add something to this. So let me just, so I added right here. Sell entry. Okay. All right. So stop loss is pretty tight on this now. I've reduced what was a stop loss up here, but yesterday's wick off of that area, I'm just going to take that as my new stop loss point. So again, I still like the story for Russell. I am staying short for now and very willing to stop out if needed. When it comes to shorting indices, I am like the fastest person to bail on the trade because I don't love shorting indices in general, but right now I just like the story for it. I think it's, I also have long positions. So in some ways this is offsetting some of my other bullish positions. So I'm just going to update this for members. This is now in the group. So this was an update to my trade. inside of the VIP room. If you're not in the VIP room and you would like to be, you can click the link. We'll drop a link to chat with our team directly on how you can get more information about that. If you would like that, again, chat in the chat right now, click that link. Why is the NASDAQ underperforming so much? Could have been Netflix earnings. Could have been a little bit of a concern there. Also, was there more earnings this morning? I guess we can ask the man himself in just a moment. We've got Chris Pulver joining us again. Should be fun. So real quick, we're just going to take a quick break, set that stream up, and then we will be right back. Be back in like 30 seconds just after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk, why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, and we're back with Chris Pulver. Hey, Chris, how's it going? Good to see you again.
What's up, Nick?
I know it feels like it's been forever, even though
I
it
know
hasn't been that much.
I
But,
was gonna text Chandler the same thing. It's like it feels weird that I haven't been on all week.
yeah. How were the Masters?
They were good.
Hey, that's awesome.
No, it was good, man. It was a great week. I was there. I got in, spent the time with you guys on Monday. Got to the destination Monday, Tuesday to Saturday. Spent the time at the golf course. Got back late Saturday night. Watched it from home on Sunday. I expect a little bit more drama on Sunday for pin placements in the Masters, but Scheffler's #1 for a reason. So he just did his thing, and nobody really caught him. But it's a fun tournament, awesome place to be, and very, very lucky and fortunate I could do that every year.
Yeah, that was just awesome. So glad you enjoyed it, and it's good to have you back on the show. Been a crazy, last week or two here. Just looking at the NASDAQ, you just have this crazy candle here today. Big drop, at I guess peak to trough here. We've now officially seen, about a 6.6% move on the NASDAQ. I'm sorry, to the S&P 500 here to the downside. Crossed briefly under 5,000. We're back above that. There's so many things you could cite for what came out of nowhere. And it always does, Chris. The bear case always comes out of nowhere. Suddenly, well, I mean, not really out of nowhere, but it's like it was already there, but the market starts paying attention to it. What I'm talking about specifically is yields creeping higher, strong economic data, and finally Powell kind of lets the cat out of the bag and says, we're willing to stay higher for longer to keep fighting against inflation. It's an ongoing fight, and you combine that with geopolitical tensions in the Middle East, and suddenly the markets are in question of how sustainable this rally is. Where are you at with all this? Is this a pullback, or does it have more room?
Well, that's a great question, and here's my take. So typically we have to see all this negative stuff to continue to drive the market lower, correct?
Mm-hmm.
You can't have good news and see the market drop. And this is what's interesting. How many days have we really put most of the fuel into the sell-off? 2. We've had 2 big sell-off days. So if you go to the SPY, we had the big sell-off on Monday this week, which was like a $10 move on the SPY, which is huge, and a 100-point move on the SPX. And then on the 4th, on that Thursday, a crazy move at the backside of that trend line. So I did this yesterday. It was really interesting to see that this candle all by itself was about a 2.06% sell-off. And then Monday, same type of thing, another 2.2%. So of the 5.5%, 6%, over 4.25% of it happened in 2 days. So that's where like all the fuel and the momentum has been. And so we're just kind of leaking lower, drifting lower. But from the technical side, here's what I'm looking at. I'm taking a fib swing from this low from October to the current all-time high. I do think that the market might drip and leak a little bit lower, but we have the NVIDIA gap looking to get filled here at this 23% pullback. I have a Gann retracement level at 30. And then what's an interesting spot is the all-time highs that we had in 2021, 2022, and a 38% fib. To me, technically, yes, we can leak a little bit lower, but that's my bounce. So I'm not saying I'm calling the bottom now, but I wouldn't be surprised if by 480 on the SPY, the market at least puts in a bit of a floor. And maybe that's a dead cat bounce. I'm not sure. I mean, if we talk wave structure for a second, Nick, then maybe we have this. Maybe this is a 1, 2, 3, 4, 5, and we have an ABC correction. Makes sense to me. I mean, so I know there's a lot of stuff fundamentally, geopolitical, Middle East, oil's down, risk off is certainly the tone. Did you see what happened to the Swiss overnight? Swiss franc had a big spike. If you go to a currency strength meter and check this out in real time, like this was about an hour or two that the Swiss just got extremely strong, and then here we are just fading the move for the rest of the day. So, I mean, it's trading. They're liquid markets. We got to pick our battles. But I'm looking at my week thus far. 1, 2, 3, 4, 5, 6, 7, 8 wins, 1 loss, and I actually had 2 more wins this morning. I closed out for TSM profit on an earnings play and Netflix for an earnings play. So as far as trading goes, things are fine.
Hey, Chris.
Chandler, what's up?
Surprise, it's me. Our power went out again. This is the third time. I don't know. The little squirrel on the wheel keeps getting tired. I don't know what's going on. But, I mean, you've got the show. I know. I figured because Nick obviously got kicked off his, and I'm on my hotspot. So I'm just going to give you the reins.
Okay.
All right. Is that okay?
Okay.
And then,
all right. Well, I want to have that conversation with Nick. No, I'm just kidding. Okay.
Yeah.
Okay, that's fine. I'll take it.
It's so annoying. It's the third time this week this has happened, but
I'll blame the eclipse from last week. That's got to be the change, right?
I don't know what's going on.
Just run. I'll take the show, and we'll just keep chatting.
Okay. Yeah, go for it.
All right. Cool, man. Thanks, Chandler. Okay. Gold short term. All right. How about this? Let's throw out some instruments. So I was in mid thought with the technicals here, levels that I'm looking at. So I just got filled on a trade for the NDX. So NDX. NDX. Try it a third time. I got filled on the NDX, and I have a broken wing butterfly with a 16.6 pin price. All that means is this. So for the next week of trading, going in to next Friday's expiration, it's a long put butterfly with a skip strike, and that looks like this. If you're familiar with the way a risk profile looks in an options trade, my risk is down here. My peak profit at 16,600 is right here, and I collected 75 cents. So my credit on the trade is 75 cents. And what has to happen here is, as long as by next week price is above this level, this is going to pay the full 75 cents to me, and I'll keep it. Okay. If price comes down to this level by next week and it gets remotely close on Friday to that level pinned, which is back to these all-time highs, this can be a 10x return on the 75 cents. So if I build this out right now, I will show you in one of my platforms here. This is a fun little way to build out some trades. Let me grab this here and get the legs. So this is an NDX. Let me edit this on the instruments. Let me see if I can find NDX. All right, let's edit the spread. So I'll go out to the 26th. I'm selling the middle for 2 contracts. This is the 26th for all of these. It's a 16,600. On the nose, 16,600 on the sell side. These are puts. And then I did the 16,610 on the upside. 16,610 on the upside and 16,580 on the downside. 16,580 on the downside. So it should look like this. Okay. So it looks a little squirrely right now because I don't know if this is my like theta line where it's time decay. But basically, this is what you can take away from this. You can see this is real price on the instrument, the NDX, and this is the 75 cents credit that I talked about, and I'm keeping this all the way. So as long as price stays where it is, I make 75 cents. If price comes all the way back down here, I still make 75 cents. If price threatens my position, there's a chance that I can make about a 10x return. You can see up here at the top, that's $1,000 on the trade. So I'd be, looking at like 8 or 9x. Now, the probability of that happening is pretty slim, but it can happen. And to me, it's my protection just in case my position is threatened, because the delta wise is like a 10 delta. So I'm using like a 90% probability that I'm getting this thing to finish out of the money and get full credit on it. Okay, so that's the trade. It looks a little bit weird, but if I stretch this out, you can get the kind of risk profile of a broken wing butterfly. All right, anyway, that's that. So let's talk technicals on these instruments. Looking at all-time highs, take a look at the SPX, same type of thing. Previous all-time highs at 4,800. So I do have a pending order on the SPX. I'm trying to sell the 4,810, do a broken wing butterfly for there for 50 cents. The mid is trading right around it. It still hasn't been filled yet, but let me just check these positions. I did have a bunch of, nope, didn't get filled. So SPX, go to symbol here. Okay, so I don't have any SPX. SPY, that's an iron condor, that's in profit today. I do have a lot of expirations that are coming in today. If you look at my account, go to the expiration here. All these 0 DTEs, those are 419 expirations. The IWM is out further, so I'm upside down in that position, but I'm longer term. That's out to January of next year. I'll worry about that drawdown, but everything else, $1,000 on the SPY, $1,000 on the DIA, $2,200 on Bitcoin. Or BITO, $1,300 on URA, $1,000 on KMB, $437. I mean, you can see it. It's a lot of green, which is good because make some money this week. These are all my days to expiration, so make some money this week on those 0 DTEs. And these are, by the way, these aren't just like, oh, I took these trades today. That'd be insane. No, these trades have been running for like 30 to 45 days, sometimes 30, 45 to 60 days, but they're mostly all in profit. Apple's going to be lost today because we just can't get the 165. These are going to be fine. The 165s by 160s, the 160 by 155s, those will be fine. I did roll out the 160 by 155. I have one here, the 170 by 165. That's going to be trading for nearly a full loss. So there's not really much to do on that one. I could roll it, but it's already upside down about $4.50. There's really nothing to do outside of just take the loss and no big deal. But losing $1,000 over the course of making $10,000, $15,000, $20,000, it's not a big deal. So anyway, that's Apple, and I can still look out of the money for additional credit spreads on Apple. Oops. AAPL, and let me field some questions here. Let's see here. New trader trying to use TradingView, open NASDAQ chart, only show New York session. I want the full chart. So what are you trying to trade? You're trying to trade NDQ? You're trying to trade the NQ? What symbol are you trying to trade? And also TradingView might limit you based on what your membership is too. I'm a Pro Plus, I think, for my profile, or a premium, TradingView premium. I don't know. So it could be limited on data feeds based on your membership. Pound dollar. So dollar index. Let's talk dollar index. Dollar index, to me, I'm still bullish on this overall. We're in the middle of a pre-summer push from March, April, May. Since we've already been pushing higher highs, higher lows, to me, the dollar looks pretty good to continue just to retest this high from 2023 around 107. If we do, in fact, hit this broadening pattern high and come back to this pocket fill, I could see the dollar index holding support around 105.50. Let's say this 105.50 to 105 support and getting up into this 107.50 to 108 zone. And then I'd be looking to take my profit on dollar long. So to me, all I'm seeing on the dollar cross is Aussie dollar pullback, Euro dollar pullback, pound dollar pullback, New Zealand dollar pullback. I'm still looking for the dollar to turn and do this. We break, we pause, we go. If we get another push to the upside on the dollar, then I look for the pound dollar, Aussie dollar, euro dollar, New Zealand dollar, dollar CAD, dollar Swiss, dollar yen, all favoring dollar strength. That's my outlook there. Okay. Let's go to, I saw Dana's asking for Costco. So Costco at 707, bull put spread, any ideas? So if you did a bull put spread, I like out of the money as opposed to at the money, just because this recent run up is still potentially in corrective mode. Until we see like a broader market bottom, I would say I'm not really doing much at the money outside of silver. Silver I have at the monies. It's a 27 by 26 in SLV. You know, I need price to go up about 95 cents by the middle of May, which I think it's capable of doing. Music to my ears. I just got filled. I don't know if you can hear that. It was on my end, but I just got filled on all my positions for the SPX. So SPX is pushing a little bit lower. I got filled with my negative twos at 48.10. Should be right here. Let's just use this account. SPX symbol. So my NDX was filled. My SPX, it's a 48.10, 48.15, 47.95 filled for 50 cents. So that's a 48.10 fill for next Friday. 48.10. So -2 at 48.10. So that comes into my wheelhouse. I can build that trade out as well. It's going to look the same thing as that other broken wing butterfly, which is there's my zero line, there's my risk, there's my 50 cents credit. Price is all the way up here. It'd have to drop from current price. We'd have to see just a continuation lower. If we have another, you know, decent sell-off of 3 to 4%, that would be, we'd have to go right around 3.8% for the week in order for me to get threatened on my position. Otherwise, I'll just keep my 50 cents. Okay, let's go back to Costco. So Costco's trading at 706. Pressure remains to the downside. Looks to me like we're pretty corrective. Levels that I like on Costco, I would say this. 692 looks pretty solid, and the 663. So one thing you can look at right now, if this is me looking at a trade on Costco, is we could set a bull put spread down in this area, and try to put in a credit order that is a little bit more attainable. So if I did it right now, looking at let's say that we trade like a 660 strike. Let's go out like 45 days or something like that on Costco. Okay, so if I go Costco trade, go out 45 days, that puts me out to May 31st. We have earnings, by the way, on May 30th, just to keep that in mind. So if you wanted to take this trade prior to earnings, I would go out to the 35-day expiration and not really worry about the earnings play, because if we have a big move up or down and it jeopardizes your position, then, you know, credit spread could be a quick loss. But if you look at it now and take the expiration prior to earnings, so we'd have the 24th expiration on our option play, and then the 30th is going to be the actual expiration. I would rather do that as opposed to going out to the 31st and you have to deal with that one-day earnings. So go out to the 24th. The level I said that I like is 692 or this like 660 area. So if we did like a 665, you can see the expected move here is around $32 over the next 35 days. If I did the 665, that puts me at about an 18 delta. There's a bull put spread right there. So it's a $5 spread. I get 70 cents. Now the rule of thumb would be something around 30% of that. So if I did a $5 spread, so a 665 by 660, $5 spread times 30%, you're looking to make $1.50 on that credit spread. So if you wanted to take this trade, or if I wanted to take this trade, 665 by 660, I just put in $1.50 credit and I set it up. So I'm going to do that. I'll take a live trade. So here's this is my little tiny account as I wait for my ACATS transfer from Schwab. Turns out that my other account's just too active and I need to get rid of some of my expirations, which will probably take me until middle of May, which is fine. That'll be like a 50K account. But anyway, I'll take this trade because I've got the buying power for it. It's only going to tie up about $350. And I'll take the trade. So a 665 by 660, put in a pending order, good till canceled for $1.50. And it's not going to fill today because it's only trading about 70 cents. But if I take the trade, review and send, put it into my account down here, and boom. So pending good till canceled at $1.50. Now what that means is price is going to have to fall, right? Price will continue to fall. Those deltas will increase. And so what is now I think I said 20 delta right now. Yeah, this is an 18 delta. So if price gets closer to my levels, we're probably going to get filled at maybe like a 25 or 30 delta. But if we don't get filled, it's not a huge deal. We're at 40. All right, so we're breaking some lows today. All right. More than likely, the probability today is that we are going to be closing low and finishing low for the week. Now, I just want to go back to the indexes really quickly. I'm going to put on this trade here. So this is a 660. Get out of the interval. 660 by 655 for $1.50 pending. And that's a 524 expiration. Right? Because earnings are on the 30th, and I don't really want to have this trade running through earnings. Okay. So I do like that trade. And what that does is that lets prices do its thing. Price can come a little bit closer to us and not necessarily threaten our position. But what I like about this trade is if we start to see that the broad markets find their footing, and it's probably not now. I mean, we're breaking lows, we're breaking below 5,000 on the SPX. I've been fortunate that the last 2 days we defended the level, so I collected some income there. But if we go to SPX and we have another, 2 to 3% to the downside, I mean, if we come back to this previous test of all-time highs, test this 382 level, that would be the SPX dropping another 3.5%. We've already dropped about 5% over the course of, this took a while, by the way. So over the course of, let's see, this is 14 bars. So that's almost 3 weeks of trading. It's taken 3 weeks to go 5.25%. So could we go another 3%, 3.5% in a week? Yeah, it's possible. Anything's possible, but that's going to be some heavy pressure to the downside. So my point is, if we find some footing here, this is a 23% level. That's a very shallow retracement level. The 30% GAN is something I see happen quite a bit. We test the 30%, and then the market is trying to retest the high. We might not get all the way to the 38%. If we do, this is where I put my position down here. But what I'm saying is, if we have the broader markets finding some bottoms, we're probably going to see something like Costco find some bottoms as well. So I'm putting that Costco trade right around that 38% pullback level. And I think it's a good fill, but I want to make sure I get filled for the proper credit. I'm not taking a 70-cent credit. That's ridiculous. But I would take, $1.50 because that's pretty appropriate for, 1/3 of the credit. Daniel says, got the May 17th, 700, 675, 512 credit. Okay, so just again, I want to do the math on that. That's awesome to make $500. You just have some risk on the trade, as you know, right? You've got a $25 spread, 512 collected on it, right? 512 collected on a $25 spread. You're collected about 20% of the width, which okay, fine. But you're monitoring levels, so you've got the 700, and that's a little tight. If you go out to the 17th, and I'll give you an expected move here. So Costco out to the 17th. Okay. It shows right now that current price is here. Okay. And the expected move, one way or the other, about $30, $29, your 700 could be threatened. That's all I'm saying. Because if you're 700 by 675, any additional movement to the downside by the 17th, you've got $20 of risk on that trade. Right. So anyway, there's options. If you wanted to roll it, you can do that as well. But with credit spreads, and you have such a wide spread, all you can really do is roll out in time and do it early enough that maybe you get additional credit for it to lower your risk. So if you got it for 512 and you can roll it for another $1 or $2, it just lowers your risk. But you definitely need to make sure that time is on your side, and you'll have to deal with earnings. But I wouldn't be surprised if Costco's earnings are pretty solid. It usually is. This is our last earnings print, I believe. Right there. We missed in revenue, but EPS was positive. I mean, it was a slight miss, 1.13% in revenue. So, anywho. But yeah, we'll stay in touch on that, Daniel. I took the trade at the 660 by 655. But I don't know. I'll be watching. I'll be fingers crossed for you. Okay, can you check the DJIA? Yes. You want to trade futures on this? Inch up. Yes. This is another one. I'm going to place, let me see if I can. So I did it on the NASDAQ. I'm going to see if I can trade. What do I trade for Dow Jones futures? Let me see this in my Tasty account. So Dow futures, DJIA. See what the price is here. Nope, that's not it. Where are my Dow futures? Not DIA. Let me see all my tickers for the Dow. Got Dow Inc. That's the company. DWCF. I don't think that's it either. Nope. Where's my Dow? That's strange. Dow Jones Industrial Average. None of these are it. Nuts. Well, anyway, yeah, I was looking to see if I could do the same thing. So this is, the Dow trading at 38,000. 2 levels I'm watching. Previous test of the all-time highs. Take the fib swing. I mean, this is like me on repeat. I mean, all I'm really looking for are what are the alignments? Okay. We have previous all-time highs. We have the 30 to 38% fib that's been tested. I could see the Dow catching some bid and outperforming. And again, there's no outperformance in a bear market. It's just which is the lesser of the crappy indexes, right? If they're all dropping, it's not like, oh, which one's better? I mean, the Dow's probably going to have the least drawdown compared to the Nasdaq or the S&P 500. It's a little bit more resilient because you go into kind of these big blue chip companies. But point is look at what price is doing right now on the Dow Jones compared to the others. If we go Dow Jones compared to the SPX is still red. Go to the NASDAQ, still red, right? I mean, we're getting some big reactions here. And I look at this all-time high level, same thing. I mean, I'm just watching my levels, plotting my fibs. So right in here. And I'm looking to see, what keeps me out of trouble. Okay. So if we have, this level getting tested, this has been about a 6% correction, if I'm not mistaken, 6 or 7%, maybe a little bit more volatile. This has down about 8%, but we're spiking back up to current levels. This is around 7% pullback or 7% drawdown. So could we pull back to all-time highs? Sure. But if we're talking double-digit corrections, okay, double-digit corrections, I mean, that's 11%. Could it get there? Yeah, it could get there. And I'll say this, if the pullbacks on the S&P, the NASDAQ, the Dow, if they're contained to single digits, I think this market is resilient enough that we can come back and retest the highs and still make all-time highs. My concern is that if we come back to a double-digit correction, if we get to a 10% level, I think it's going to be much harder for the market to justify that. I think what we do if we hit, 9, 10, 11, 12% corrections, that we end up getting into a range where this market made a rip, this market pulls back, and this market retests the high, and we're going to get stuck in a range. And then there might be nothing happening until the end of the year because we have to deal with election drama. And so all the traders that have been just spoiled by direction might be missing out because we might go into a directionless, end of Q2 into summer trading, and there might be a very boring, 3 or 4 months ahead. Maybe. I don't know. I mean, if I had a crystal ball, I'd share it with everybody, but I don't. So I'm just trying to position accordingly. Gold sell? Really? You going to sell gold right now? I'm more interested in just buying dips. I mean, I'm out of my gold positions because it blew through my target. I am still long on silver. Every time I say that, it makes me think of hush puppies and terrible battered fish. But I am long on silver. Any pullbacks, any dips, I'm looking to stay long. And this is my measure move. So to me, technically, silver is a much more attractive trade than gold. I know Nick was in gold for a long time and just trailing. And I'm not sure if he got stopped out on it. He probably did, maybe on this first spike to the upside as we hit like 24.30. But still, gold is, I'm not selling it, man. I mean, if anything, I would wait for a dip and I would just try to buy some more. But I think gold for the full measure move is 2470, and to me, silver is a better spot to be. Technically speaking, it's more measurable. I'm not trading all-time highs, guessing where the high is going to be or how high we're going to go. Silver has projected symmetry and moves that I'm still anticipating it gets to. We haven't talked about Bitcoin. I mentioned this earlier in my session. Bitcoin, the halving is coming up tomorrow. Look, the halvings happen X amount of times every roughly 4 years or so. Price is responding pretty nicely for right now. If we have any further pullbacks, I'm still looking to buy the dip between 60K and 50K on Bitcoin. I got filled in a couple positions this week. I took a trade on BITO, which is a ProShares ETF. I got filled at 2650. It's up a couple bucks already. And IBIT, I added in to some dollar cost averaging the BlackRock ETF around 36. So I've got another pending order at 3150. So I'm dollar cost averaging into some Bitcoin. The next big level for me is, we can either continue to show this consolidation right here. So this level, if it's horizontal, we just come back up to the highs at 75. The next big celebratory move would be a break above 75, and then everyone's going to be cheering on 100K. So we've got to get there first. We got to break there first, but right now it's sideways. The wedge pattern didn't really work out. It's just, I don't think the wedge pattern is really an easy one to trade. So to me, if this is high, low, lower, high, lower, low, this could be just consolidation, and then the market justifies a higher high. After the halving, if it dips a little bit lower, okay, fine. But this low, this high, as long as we're not breaking this structure down here, this is just all correction to me. And I'm looking to see, when the buyers come back in a big way. So I'm still bullish outlook on Bitcoin overall. Dollar index, Dennis, we talked about that, but I'll show it again. Recommend. I'm not recommending anything here, Ron. We don't do that. Gold, silver, and NASDAQ. Well, I'll give you what I'm in. How's that? I'm in silver, dude. So, I mean, I'm collecting income on the NASDAQ. I've already taken profit on gold. I'm in silver for the next 10 months. I mean, I'm taking silver trades out to January of next year. So I've been long since 20. I'm holding shares. I'm holding long call options. I'm doing diagonal spreads. So SLV to me is a nice trade. That's what I'm in. I'm in a bigger position there. If I show where I'm at on SLV, you can see right here. That's SPX. Here's SLV. So SLV, I'm up about 18 grand and holding. So ideally, if this hits my profit target, 1, 2, 3, 4, 5, 6, 7, 7. This is going to be roughly my profit. So about $6,100 on 7. So about 43 grand on silver if I hit my profit target by May. So May 17th is my long options for a credit spread. July. If I hit my $30 target on SLV by July, that'll be a $43,000 profit. So not a bad chunk. Not a bad chunk. Should be about 3 to 4% for the portfolio. And I'll take as many of those I can get. If I get 10 of those a year, I'm doing pretty well. Okay. Anton seems to be the expert. NASDAQ on spot per performer, gold major asset, silver rare traded. Okay. You give me the bullet points. I mean, look, you trade what you want. I know it is, but silver to me technically has, look, lower liquidity is not a bad thing if there's an absent seller, right? If there's no sellers and this is just a low volume buy environment, that's how gold made the run and breakout that it did, right? Nobody was participating in gold at the all-time highs until it broke out, and then all of a sudden it became all the rage, and then it got dumped into, and it escalated even further. So, silver's just getting started here above that $26 breakout. So anyway, that's my 2 cents. So anything else? I've got some trades running. No, I get it, man. I'm just having fun. So look, I am everyone's biggest fan and biggest supporter. I mean, I've been trading for, I've been in the markets for over 20 years. I've been actively trading for 15 years, full-time trading for 15 years. And, I trade equities, I trade options, I trade crypto, I trade Forex, and I've done it for a long time. So I'm just looking for a way to make money, just like everybody else. So there's times where, yes, I'll be fundamentally aware. We'll talk about, we'll opine on what we think is going to happen, but at the end of the day, we don't have crystal balls. I trade probabilities. I trade historical significance. History doesn't repeat, but it often rhymes. That happens all the time in the markets. You can learn a lot from what the market's done in the past, but it's been through world wars. It's been through crises. It's been through inflation. It's been through deflation. It's been through all sorts of stuff. And is it different? Probably, right? Because we have different mechanisms in place. We have different tools in place. We have different, backstops in place. But at the end of the day, we're still just trading. There's plenty of opportunity in all the assets I mentioned to make some money. And that's all I'm trying to do. So what I do is take a trade, do my best, move on. Take a trade, do my best, move on. You're never going to see me say, this is my entire portfolio. I'm putting it all in line because of this trade. That's insane, right? I've been around for way too long to have one trade be my magnum opus and the reason that I live or die, and it's just not worth it. So I just trade. If I take 100 trades and I could win 60, 70, 80 of them, awesome. I expect to win. When I lose, I take it on the chin. I move on. No one trade win, no one trade loss. They don't define you as a trader. So, keep the emotions out of it. Stick to the process. I've said that for years. Process equals profits. It's really important. Okay. All right. So that'll wrap it up for my little sesh today. I'm going to jump into a webinar here at 11 o'clock. I've got some other classes to attend to. But as it's been posted, you can follow me on YouTube. My channel's youtube.com/Chris Pulver Trading. And I've got a Discord channel if you'd like to join that as well. I think the team shares that, but I'll throw it in there for a link that doesn't expire. Let me throw it in here right now. So this will be edit link. All right. So this is my Discord group if you'd like to join. Join my free Discord group. Put that in the chat for everybody. They are out of the money on silver. They are bad. So what I end up doing is I do long options. So I'm doing a diagonal spread where I'm long at 20 and I'm selling at 30. And then once that 30 expires, and if it's like 75 to 80% decay and I'm collecting most of the profit, I'm better off just going out further in time and collecting more premium. But I either own SLV or I'm doing a diagonal spread. So yes, you're right. Like out of the money's not that great. At the money's are fine. I collected 60 cents on the 27 by 26 this week, and I'm going out to May. So I'm doing like a 30 to 40 day cycle. If price continues to go for the next month and a half, then I'll make 60 cents on that per trade. All right. So plenty of trades out there to dissect, and I'm happy to share it with everybody. And this is what we do. All right. So happy Friday, everybody. Nice to be back. Nick and the team, Chandler, nice to be back. It did felt weird. I know I only had a couple minutes with Nick, but it was funny, like all week, just like, yeah, I'm used to doing like 2-3 sessions a week with you guys. So anyway, we'll be back. And that's it. Happy trading, lots of profits. Have a great weekend, and see you next week. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edge Finder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.